Good evening. This is Ryan with TrendLizard.com. We're going to take a look at a few tickers tonight by request. Thanks for sending the email, Trey. We're going to take a look at Microsoft, MSFT, Dogecoin, been in the news quite a bit lately, DOGE, as well as NVIDIA, NVDA. We're going to apply the Elliott Wave theory to their price charts to determine where they're at and try to figure out the most likely path of where they're going to head in the future. We're not doing this as fanboys. We're not doing this with any kind of bias or anything like that. We just want to truly understand what the charts are telling us so that we can determine what their likely path is heading forward. So let's go ahead and dive in. We've taken a look at all of these at different points in time, but they're definitely due for an update. So Trey, thanks for sending the email, and let's begin. So we're going to start with Microsoft. Incepted back in 1986. Basically gave us a massive trendy 5-wave advance into the 2000 high. That was followed by a massive ABC pullback into the 2009 low. And since then, it's been in a very large trendy up move that we'll take a closer look. But on the larger time frame, basically, the only thing we've really ever seen from this guy is trendy upside movement, counter trend downside movement. The question that we need to answer is, where is Microsoft in the progression of this new 5-wave advance? Because once it completes, we would again be expecting something larger to the downside like we saw back in the 2000s. So let's go ahead and zoom in on the action off the 2009 low. Again, the goal here is to identify a completed 5-wave trendy Elliott wave pattern to the upside. This is the way I have it labeled. Obviously, it's a very large, very detailed move that you can see here to the upside, but I think at its base, the thing that I'm thinking that makes me lean towards this labeling here to find that 5-wave pattern is you get a first wave, and then you have this large, like almost 2-year-long second wave pullback. You look at all this action that's happened off the 2011 low. We've never really seen any type of pullback that matches the scope of this pullback here until now. So I think, aside from the subdivisions and all that, certainly there's different ways you can do it. The thing that makes me think that this is a larger fourth wave correction to offset this second wave is the size. It's really the only move I can find that fits in that position. So bottom line, we believe the pullback off of the 2021 high on Microsoft to be a large fourth wave. Once this fourth wave completes, we would expect a fifth wave advance to a new high to complete this 5-wave move. Now that's different than some other things. We see a lot of things that we believe the 5-wave advance to already be complete on a larger time frame, and for that larger pullback to already be underway. So in that respect, maybe Microsoft is more bullish than the overall market. Still, I don't know that it's a buying opportunity quite yet. Let's go ahead and zoom in and take a look at more approximate action, this action off the 2020 low. So this takes a closer look basically just at this fifth wave advance that completed the larger third wave here. And it shows the detail of that move. It wasn't always apparent, but I think what is apparent after the size of this pullback off of the late 2021 high is that the advance off of the 2020 low is very clearly over. No matter how you want to label it, must be a trendy move because it was happening within an uptrend to the upside. But then based on the size of this pullback, very apparent at this point that this move is over. So this pullback here has already found support, or at least tested the yellow support area, which is basically a Fibonacci retracement of this entire advance off of the 2011 low. This is the area we would expect this fourth wave to ultimately find a low. It's basically about 148 up to 220. It's tested that level now, so that's a good sign. Again, we're looking for that low in this area at some point. But so far, there's no sign that this is the low to the move. So let's go ahead and take a little bit closer look at the details of this pullback that's been playing out since late 2021. Now, this is a tough move to label. Certainly, there are different ways to label it, as there generally will be when you're in a large counter trend move. The one thing we are fairly confident about is that it is a counter trend move. It seems to be littered with 3-wave moves. And just overall overlapping, choppy counter trend action. So in that respect, it's bullish. The problem is there's really no indication to this point of a low. We know again that it can go all the way down to 148, that area. Obviously, there's a lot of room to the downside for it to move, and it could get a lot bigger in terms of time as well. So really looking at the actual labeling of this downside action doesn't help us a ton because it's such a complex choppy, messy counter trend move, there's really no saying exactly when it's going to end. Let's go ahead and zoom in and just look at this action off of August high. What we're seeing, the most recent down leg in action since then, is a trendy down leg and a counter trend recovery in October. And now price is broken down and moving to new lows. Basically, the point in showing this is what we are currently seeing to the downside. Our trendy movements and recovery efforts are proving to be counter trend movements. As long as we're seeing that, we're going to know pretty confidently that this pullback is not over. So with Microsoft, unfortunately, there's no perfect way to say, okay, this is where a low is going to happen when you're in a counter trend move like that. I mean, again, we can just look at this overall yellow support area and look for a low there, but that's a massive area that doesn't give us a ton of information. What we need to see is a reversal of this type of price action that we're seeing, trendy downside action, counter trend upside action. We need to see something trendy to the upside that sticks to make some noise to think, okay, finally, maybe this big pullback on Microsoft is over. As is, we're in a big, complex counter trend down move that is not yet over. So you got to stay away from it until there is some sign of a low. So there's Microsoft. We're going to move on now to the ever famous Dogecoin, $ DOGEUSD. This chart's not the best way to look at it, but I want to start with this chart because it drives home a pretty simple point. It was incepted back in 2014, traded, for a couple pennies or less for several years before 2021, when it went basically from nothing up to about 75, and then just as quickly, nearly just as quickly, has given a huge portion of that back. I think it's important to keep this perspective that Doge's fire was a very quick one, and it burned out fairly quickly. I think the hope, obviously, for a lot of people is that this glory is going to be relived, or that, bag holders along the way may have an opportunity to recapture that. Maybe, but I don't think it's the fire that people are hoping it is. And we'll just kind of continue to dive in from there. So let's look at this. This here is just basically a straight linear scale. Every box is 0.5, 0.05. Let's look at it in a logarithmic scale where it's a percentage type move. This starts to make a little bit more sense when we look at the, obviously the starting action, just choppy mess, hard to figure out. From there, off the low in 2016, we start to see some trendy 5-wave up moves, followed by counter trend pullbacks. In 2020, that massive move off of the 2020 low, trendy upside action obviously completed in 2021, and then this counter trend like action that's happened off of that high. So on a larger time frame, even though it doesn't make a ton of sense in an overall Elliott Wave pattern, we are seeing some internal patterns that do make some sense as far as just seeing trendy upside moves and counter trend downside moves. So in that respect, it's bullish. So the hope would be that this proves to be counter trend and price can relive its old glory days. So let's go ahead and zoom in a little bit. This takes a look just at that counter trend action in 2018, 19, and 20. And then the big jump that happened, the big trendy 5-wave move off of the 2020 low. This was great. This was a beautiful, massive 5-wave move. Once it completed, a very large correction obviously began. The initial suggestion, to me anyway, is that this is a counter trend down move from what we're seeing. But I think there's more to it than that, so let's just keep driving in here. This takes a look at the pullback off of the 2021 high, and there's certainly different ways to label it. My initial inclination is to label it as a counter trend move, an ABC. There's some overlap that occurs here, but at the same time, you can't rule out the possibility that it's a 5-wave move to the downside and therefore a setup to become a larger downtrend. I guess the point that I want to make here is that it doesn't really matter how you label this downside action to this point. I think what is important to us is how price action has played out to the upside off of the low for this pullback. And that is as a counter trend move. I think it's pretty hard to label it any other way. This action here, let's go ahead and zoom in and I'll show you what I mean. This takes a look at that recovery off of the 2022 low, happened in June. But it looks very much like a counter trend move. You get this upside action here that very much looks like an ABC recovery. If you want to be creative, you want to be a fanboy and try to find some way to label this as a trendy move and not call it what it looks like, well, then you have to answer the question, why did this pullback then retrace more than 61.8% of this up leg? I guess the bottom line is everything we're seeing here suggests that it's a counter trend move. Then it pulled back here in what looks like a B wave now that it's jumped up to the upside. But this looks like counter trend downside movement as well. So overall, this looks like an A, B, and massive C wave recovery that looks like overall a counter trend move. Very hard to be bullish on this objectively. Everything that we're seeing suggests that this will ultimately turn back down and be retraced. And so I think you have to be careful. It certainly could continue to grow to the upside, but if at any point it moves below 0.09, I think that would be our clue that this thing is probably failing and turning back down and going to create some damage that way. So if we step back out here, again, what we have is a big counter trend down move, big trendy up move, and then what looks like a big counter trend down move that is not likely over. Possibly a blueprint for this kind of thing happened back here in 2018, 2019. You had this long drawn out ABC move. Then you had this sharp pop that happened right here. Large drawn out ABC move, and then you have a similar pop to the upside. What ended up happening, price chopped around for another year or so, ultimately moved to a new low. At that point, it had set up a new trendy up leg. As is, unless we're just trying to force a way to be bullish on this guy, which is not exactly a winning formula in the market. Market really doesn't care what you think or me, so we try not to do that. But from what we're seeing, again, this recovery off of the 2022 low very much looks like a counter trend move, which suggests that ultimately a new low will be set before Doge is able to possibly resume its overall uptrend. So there is Dogecoin. We've got one more for you. We're going to take a look at NVIDIA, NVDA. Here's the chart. We've definitely looked at this guy before. Incepted back in 1999, shopped around quite a bit, gave us a big running ABC correction to the downside. And then in 2008, it embarked on a very large, trendy 5-wave move to the upside that ultimately completed in 2021 and has since been pulling back. So this means a major high has been established. Obviously, once you complete a 5-wave move of this time frame, you're now looking for a correction on a similar time frame. So you're looking for a much larger pullback that corrects this massive, what are we talking about, 13-year up leg here. So let's go ahead and zoom in and take a look at this pullback that we're seeing to the downside here. So this looks at the final upside action into that 2021 high, and then the development of the decline that has happened since then. Now the first thing that sticks out, super obvious, hard to miss. This down leg looks like a 5-wave move. You can see it for yourself. Everyone can see it. 1, 2, 3, 4, 5. The implication, if we're getting trendy downside action, is that this is just the first leg of a larger pullback. So to me, it seems likely then that what we're dealing with here is an A wave. At some point, we're going to get a larger B wave, which could very well be worth trading. But overall, we would still have to expect the formation of a larger pullback, which again makes sense in the context of this massive 5-wave advance completing and a larger degree correction playing out to the downside from here. So that's what we're looking at. Looks like potentially a 5-wave move that could have potentially completed at October's low. Let's go ahead and zoom in. This takes a closer look at that 5-wave down leg. See to the downside here. And it does take a pretty clear 5-wave form. Now we're starting to see some life off of October's low. There's no proof yet that this is in fact the end of the 5-wave move, but if it is, there's some promise there because a recovery, or excuse me, a Fibonacci retracement of this down leg would point NVIDIA up to this area about 205 up to about 255. This represents a 38.2% to a 61.8% retracement of this big 5-wave down leg, which is the type of thing we would expect before the next big 5-wave down leg completes. So on a larger time frame, you can't really trade this with the idea that maybe you're getting yourself into a new long-term position, at least not based on the objective take of this Elliott Wave price action here. What might be the case, though, is you might have a completing 5-wave move that gives you an opportunity to trade a larger recovery effort. Now, it will be a counter-trend recovery effort, so it's not going to be as predictable or as clear, but there is some promise that it could get up all the way into this area before it turns back down over the next several months. One of the bullish things that could happen, or is an indication that a bullish outcome is playing out here, is the move above 160. That would be a deep enough retracement of this fifth and final down leg to think, okay, this is a larger degree move. Another thing we would look for is trendy upside action, and it looks like we're starting to get something like that on NVIDIA. Here's a zoomed in view. Obviously, it's not the most obvious thing, but this is the best way I can find to label it, and more importantly is finding the key level that price should stay above if this is in fact an important low, and that level is 120. Now what I would like to see, just to be safe, given that we've been in this very large substantial downtrend, is the formation of a 5-wave move that completes and then see it followed by a correction that stays above 120, just some type of 3-wave pullback. Once you get that, you have a very clear setup for higher prices. Obviously, anything you do before that, there's some risk involved because we just don't know yet. We can't be certain that a low is in. We like to have a little more proof, especially if you're trying to trade a counter trend move to the upside within a larger, pretty impressive downtrend. So I think you can be starting to turn bullish on NVIDIA on the shorter term timeframes just based on this trendy-like upside action and based on the potential that you have a big completing 5-wave down move here and all of that pointing up to this yellow area. But I think you need a little more proof before actually diving in. At least that's what I would look for. An aggressive person could potentially just buy it with a stop at 120, but obviously there's more risk associated with that. So I hope that is helpful. This is the type of stuff we do at TrendLizard.com. We take a look at 70 plus different instruments every day: SPY, DIA, QQQ, oil, global currencies, global markets, pretty much anything under the sun, individual stocks, cryptos, all that stuff to try to make sense of where they have been in their Elliott Wave patterns and where they're going. So please come visit. Have a wonderful evening. We will talk to you again very soon.